Tax and compliance for hustlers. Tax write-offs done right, what you can and can't deduct. Schedule 280E edition. Schedule 280E makes taxes tricky, but it doesn't have to leave you broke or scrambling. The key is knowing what you can deduct, what you can't, and how to work within the law to protect your hustle and maximize your profits. Welcome. Today, we're breaking down tax write-offs under Schedule 280E, what's allowed, what's not, and how to navigate the nuances of deductions so you can keep your hustle compliant and profitable. Let's get into it. Part 1. The basics of write-offs. Under Schedule 280E. Before we dive into the specifics, let's talk about how Schedule 280E changes the game for write-offs. If your business involves federally controlled substances like cannabis, you're limited in what you can deduct. Here's what you need to know. The Schedule 280E deduction rule. Under Schedule 280E, businesses involved in the trafficking of Schedule 1 or 2 controlled substances cannot deduct ordinary business expenses on federal taxes. This includes everything from rent to marketing costs. But there's one crucial exception. You can still deduct the cost of goods sold, or COGS. What are COGS? COGS includes the direct costs of producing or purchasing the products you sell. For example, if you're running a cannabis dispensary, the cannabis itself, the packaging, and inventory-related costs fall under this category and are deductible. What's not deductible? Expenses like rent for your store, marketing budgets, utilities, and even wages for your admin staff are not deductible under Schedule 280E. This can leave cannabis businesses with a much higher tax burden compared to other industries. It might sound limiting, but understanding the difference between COGS and non-deductible expenses is your first step to navigating Schedule 280E effectively. COGS. Your deduction lifeline. Let's dig deeper into COGS because this is where you'll find some relief under Schedule 280E. Here's what qualifies as part of your cost of goods sold. Raw materials. This includes the actual cannabis you purchase or grow to sell. It's a direct cost tied to your product, making it one of the most straightforward deductions under Schedule 280E. Production costs. If you're cultivating cannabis, expenses like fertilizers, soil, and even utility costs specifically tied to your grow operation can be included in COGS. This doesn't include unrelated utility costs for retail spaces, though. Keep it specific. Inventory-related labor. The wages of employees who handle, prepare, or package your products qualify as part of COGS. This doesn't include admin staff, marketing teams, or anyone not directly tied to the product. Detailed records are your best friend when tracking COGS. Save receipts, keep invoices, and document every expense that directly contributes to your product. This is critical for staying compliant. Part 2. Non-deductible expenses to watch out for. Now let's talk about what Schedule 280E doesn't allow. These are the expenses that may be perfectly legitimate for other businesses, but are off-limits for those subject to Schedule 280E. Knowing this can save you from costly mistakes come tax time. Rent and utilities. First up, rent and utilities for your retail or office space. These don't fall under COGS, which means they aren't deductible under Schedule 280E. This is one of the biggest challenges for cannabis businesses. Example. Let's say you're running a dispensary. Even though your rent is a massive part of your operating costs, the IRS doesn't allow you to deduct it under Schedule 280E. Workaround tip. If part of your space is used exclusively for inventory storage or production, like a back room for inventory prep, those costs might qualify as COGS. Work with a tax professional to divide and allocate these expenses accurately. Marketing and advertising. Marketing and advertising are crucial for business growth, but under Schedule 280E, they're considered non-deductible expenses. This includes everything from paid social media campaigns to event sponsorships and even website design costs. While it's frustrating, keeping these expenses separate from your deductible costs will keep your business compliant and out of trouble with the IRS. Want my exclusive tax write-off checklist and tools I personally use? Message in the comments, tax write-off checklist, to receive your copy. Part 3. Compliance Strategies for Navigating Schedule 280E. Navigating Schedule 280E can feel restrictive, but with the right strategies, you can minimize your tax burden while staying on the right side of the law. Let's talk about how to make it work. Separate expenses by category. The first step is organizing your expenses into clear categories: COGS, non-deductible expenses, and personal costs. Keeping these separate ensures clarity and makes tax filing smoother. Tip for tracking. Use accounting software like QuickBooks or Wave to label every transaction. For example, tag all COGS-related expenses as deductible and marketing costs as non-deductible. This clarity will save you headaches during tax season. Work with a tax professional. When it comes to Schedule 280E, professional help is worth every penny. A tax advisor with experience in the cannabis or CBD industry can help you maximize deductions while staying compliant. Look for someone who specializes in Schedule 280E specific cases. They'll know the nuances of what's allowed, how to document it, and where you can find legitimate savings. Partnering with a pro ensures you're not leaving money on the table or setting yourself up for an IRS audit. In closing, under Schedule 280E, tax write-offs can feel like a minefield, but knowing the rules and focusing on COGS can save you money while keeping your business legit. By separating expenses, working with a pro, and staying on top of compliance, you're setting your hustle up for long-term success. Yeah, what's the weirdest business expense you've tried to write off? Drop it in the comments. Thank you for watching Taxes and Compliance for Hustlers. If this episode gave you clarity and confidence, hit like, subscribe, and share it with someone navigating Schedule 280E. Let's keep building, learning, and thriving together. See you in the next episode. I use QuickBooks and Expensify to track my expenses and stay compliant. Check out my affiliate links below to get started. If this video saved you money, hit that thumbs up, drop a comment with your biggest tax question, and share this with another hustler who needs this knowledge.